Hello, welcome to the European Open briefing for Monday, January the 30th. I'm Rafi Bahajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So we have a bit of risk-off sentiment in currency markets, and that's mainly due to that announcement by Donald Trump, where he's imposed a temporary ban on immigrants from certain countries. We also had weak GDP data out of the US on Friday, and all of that is weighing on market sentiment. Of course, all of this adds to the ongoing concerns about a possible trade war with the US and its trading partners. So all of this has boosted the Japanese yen this morning, which is up against its major counterparts. Although we do have a fairly quiet trading in Asia today because of the Chinese New Year celebrations, where many markets are closed. But given that it's still going to be a fairly significant week, we've got the central bank meetings from the Fed and the Bank of Japan coming up later in the week. So let's begin with the dollar-yen pair. We can see the dollar had been rising towards the end of last week. It hit a one-week high of 115.37 yen, although it did start to retreat after the weaker than expected US GDP data. But immediate concerns are over Trump's policies. He's imposed a ban on refugees and also on immigrants from 7 Muslim-majority countries, and all of this has significantly hurt market sentiment. Although the dollar index has managed to hold above the 100 level. But overall, of course, we still have those other concerns from Donald Trump's policies, mainly on the trade war, as he's already made clear his views on China and Mexico, and his views on the US from the Trans-Pacific Partnership Trade Agreement as well. So all of that is weighing down the US dollar. If we look at US Treasuries now, we can see US Treasuries, although they have recovered since mid-January, they have come down over the past few days. Today they're off their lows, and that has helped the dollar rebound a little bit. But it's interesting to see in the chart when we compare it with the dollar index. Although the treasuries and the dollar usually are very strongly correlated, there's been a disengagement in mid-January as the prospect of higher US inflation has helped treasuries higher. On the other hand, those negative concerns about Trump's policies have dragged the dollar lower. Although in recent days, that correlation has started to strengthen again. Now let's have a look at that GDP data from the US on Friday. We can see we had the advanced estimate of US GDP for the fourth quarter. It came in at an annualized rate of 1.9%. That was significantly weaker than the 3.5% we had in the third quarter, and slightly below estimates of 2.2%. Of course, we also had much weaker than expected durable goods orders as well. So all of that has been negative for the dollar. Coming up later in the week on Wednesday, we've got the FOMC meeting where the Fed is expected to hold rates, but they may signal a possible rate hike maybe at the next meeting in March if the data is positive until then. But also on Friday, also important is the non-farm payrolls report. So both of those events are high-risk events for the dollar. Let's move on to the yen, because the yen is broadly stronger against all of its major counterparts. Of course, the uncertainty over Trump's policies, and then also we did have a terrorist incident in Quebec, Canada. All of that is adding to the risk of sentiment, which is boosting demand for safe havens. Gold, on the other hand, although it has recovered since Friday, it's off its earlier highs. Gold is currently trading at 1,190. The reason why gold is seeing a more muted response to the risk-off sentiment. That's mainly down to the fact that Chinese markets are closed, so we've got more restricted demand for the yellow metal. Going back to Japan now, though, we had weaker than expected Japanese retail sales. Of course, that didn't have too much of a reaction in the markets. But what may have more of a reaction is the Bank of Japan's policy announcement tomorrow, where they will conclude their two-day policy meeting. The bank will likely give a more optimistic outlook for the Japanese economy as exports benefit from the weaker yen since the US election. So a more optimistic outlook will likely support the yen in the near term. If we move on to the euro and the pound, both currencies have recovered from Friday's lows, mainly due to the weaker dollar. In terms of the eurozone this week, we do have the flash inflation and flash GDP estimates for the fourth quarter. So both of those will be important in terms of the European Central Bank's policy assessment. The Bank of England, in terms for the pound, the Bank of England meets on Thursday. They will also publish, other than announcing their latest policy decision, they will publish their quarterly inflation report. It is possible the bank may provide a more upbeat assessment for the UK economy, but overall it's expected the bank will maintain a neutral stance in the near term. But also to note for the pound, we've got the Brexit debate in Parliament over the Brexit bill for triggering Article 50. The government could face a tough time in the debate by MPs, as the Scottish Nationalist Party and Labour may demand some amendments to the bill, particularly on single access market, and so that could complicate maybe could lead to the government being forced to make some amendments. So that will be watched closely by the markets. The pound was currently not doing too badly, about $1.25. The euro has slipped below the $1.07 though. So on the whole, those risk events coming up will be quite important. Before we go, let's have a quick look at today's economic calendar. We can see there we had that Japanese retail sales figures coming up later today. We've got the economic sentiment index out of the Eurozone, and we're going to have the flash estimates of German inflation for January. In the US session, we've got the personal consumption and personal income data coming up, as well as the core PCE price index. That's important for the Fed because that's one they watch more closely in terms of looking at inflationary pressures. So the US data will be fairly busy and with some very important data coming up. And then just to mention that for the rest of the week, it's going to be fairly quiet in Asia due to the Lunar New Year celebrations, and that includes China, Hong Kong, South Korea, Singapore, and Malaysia among the major markets. That's it from me. Thank you very much for watching and have a great day.